And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Thursday, September 23rd, 2021. First thing you're going to notice on the charts is that the rally did push up past where I had labeled wave one. And that breaks a rule that a fourth wave cannot penetrate, invade, go into the territory of price territory of wave one. That's what the S&P did. And so what I've made the change to is it's just three waves down. So I've labeled it ABC on a minor degree and then put an intermediate A right there. Now, what could be going on? We're going to get that ABC. So we're still in the process of putting in the B wave, which in and of itself is a three-wave structure. We're in the C wave. The C wave is going to be five waves. It's as sloppy as hell. And let me just open this up. It is an incredible sight when I watch what the market does. And it's like all this rejection yesterday, all this nonsense yesterday. This on the news that Evergrande had paid their yuan-denominated bonds. They've made a payment, but there was still uncertainty, and that was only, I think, like $85 million. The one that was due today was like $330 million, or even larger, and we still don't know if it's been made. So the reaction by the markets is kind of knee-jerk and kind of unpredictable, but very, very fitting for the wave that is unfolding here. Because I just feel that everyone's getting bullish again, and everyone thinks that this whole downplay was nothing, that this entire thing was the Evergrande. It's like, okay, whatever you want to call it, but Elliott wave does not take any notice of the news or of fundamentals, just the human psychological reaction, behavioral reactions to what is happening in the world and in the market. And boy, are we getting them. Now, typical for a B wave, they're deceptive, they're destructive. They lack direction and they grab direction. And that's exactly what's happening here. We have a nice A wave up, we get a B wave down, choppy as it was, and then we just start to rally in a C wave. We get that, which was nothing more than overnight a total rejection of what the rallying up. And they drag it down, they tap onto the the 50, and then we start to trade, and they just absolutely pile in boatloads. The Dow, just buy it. And it's quite extraordinary to watch, but even more extraordinary to trade, because when you trade it, it's just on the hourly chart. And this is a 30-minute chart. I'll open it up. Oh, come on, screen. Do me the favor and give me the whole, Jesus. Sorry, folks. This thing is a royal pain in the butt. And I want to go down to a lesser. I'm going to go to the 15 minutes so we can really see what these bars look like. This is this morning. Right out of the gate, buy it. And not only buy it, but buy it up $24. Then take a breath and buy it up an additional $14. Then buy it up an additional more and more. And so then when they finally finished that first round at 7 or at 10 o'clock, they had taken the market up about $40. That's a nice move to catch first thing in the morning. It certainly can make your day, but the buying really never let up. We had a couple of down bars. These are 15-minute bars, but basically it was just buy it, right up to about 11. Then we finally got some selling that came in, and then just peter out and just do this angle up into the bell. Now, here we are sitting in Globex, dead still. Dead still. Nobody wants to trade. Nobody's come in to do anything because now tomorrow's Friday. It's an expiration Friday. Every Friday is a weekly expiration. So we go through this cycle over and over again. And so how I'm viewing this is we really need to take it day by day. And then we really need to trade what's in front of us. So the fact that the market, I want to show one more thing. If we take a look at the daily chart, it just wants to open up for me. And then I can open this up and we take a look at this daily chart. They were desperate to get above the 50 and then touch that 20. They got above the 50. That relieves the negativity in the market and brings back the positive back to the market. So however you want to read it, this is what now is going on. This market has gone from being bearish to now turning back to bullish. Does not necessarily mean that the trend change is changed back. I still believe we're in a correction, but on a daily basis, it looks like we still may have at least one more day of upside. They're not giving up the 20. You can see here in Globex, they're going to sit right on top of it. And so unless they can move it lower and then move it below the 50 and then close it below all of that, then it reverts back. But for right now, I am interpreting the bars on the daily as positive. So I think we get at least one more day of upside. How intense it's going to be, we'll have to wait and see how they want to come in. A lot of it's going to be according to where these stocks will be expiring. And so we're, to look, they blew through a lot of strikes on the way down and they're blowing through them on the way back up. So a lot of position adjusting going on in all of the big stocks in all the indexes. So what can we expect from this B wave? Now let me go back down to my hourly chart and we can take a look at it. Right now, A, B, and then we might have additional upside. And right now, we're honing in on next resistance at 44.60. Then we have 44.84, 44.93, and ultimately we certainly can get up to 45.23. Is that going to be what I expect? No. I actually think they'll run out of energy. Each day, it's like the buyers race in. It's like, if you're out there scrounging and still trying to find buyers, I don't know, you may get a little scarce, but who knows? So RSI is starting to diverge a little bit. So we'll wait and see. But I do think we should be able to reach 44.60 to 44.84. I do think that is in the cards. And as far as I can tell, again, let me try to open this up. Come on, Jesus Lord. I don't know what it is, the computer, the mouse, the something, but it just doesn't like to follow the commands. So we need to count 5 waves up. So this would be 1, and then we got 1 and 2, 1, 2 right in here, and then 1 and 3. If that's all of 3, and this is the 4, and then we got maybe a little bit more, a little run up to complete the 5 and put a C up there and put a wave B, an intermediate wave B. So this is the difference. Where we were forced to stop counting on the minor level because we reached an ABC that completed intermediate wave A. Now, the only other choice that I would have is I drop everything a degree and then this would be minor wave A, but I'm going to leave it intermediate. I mean, this was a pretty steep drop in both the S&P and in the NASDAQ and did, more of an intermediate level drop. Coming back up, I need to change these to the minor level. Put that there. So we just changed the color so it's reflecting what I use to designate that level or that degree, the B, and now we're looking for the C. So unless this is 1, this is 2, and this is 3, and this is 4, and then we get a larger fifth, and that's why we have zones all the way up. I think in the back of people's minds, they're thinking that we should be getting back up to 4,500. That certainly can be the case. Remember what I had said a while back, a few days back, that there's always going to be this possibility in the back of the minds of a lot of people that this market should continue and move to new all-time highs. That this was just a folly and that we're going to move. Now, that still might be the case, in which case I need to then go back and to realize what got completed here if this is a fourth wave of some nature. And it would have to be a fourth wave I would have to think it'd be a fourth wave on a minor, at least a minor level, but if not intermediate, or possibly even primary. And if we're in a primary fifth wave up, then yeah, we're going to get that. But I'm not convinced of this yet. I've been pretty satisfied with the counts up to this level. So more's got to play out before I'll start changing on that degree and to what really finished here and then what this is. So I'm going to continue to count that we are in a much larger corrective phase, but as in all larger corrective phases, we have to let quite a lot of it unfold before we can determine what degree and what structure, what type of structure it's going to take. For example, if this ended up being 5 waves down, it still would be a wave A, and I may still have to back it up, and this would be wave 1, and this ends up being a wave 2, which takes the pressure off that point, not going above that point. So, but I'm going to leave it like it is for right now. I will spend some time over the weekend just really pulling things apart so that I can be as accurate as I possibly can. But for right now, and dealing with tomorrow, all eyes are on that daily chart. And this I'll share with you again. To really put this together, on the daily chart, which is going to take control of a daily down to the hourly, and how things pan out over the next several days. When it broke the 20, we got a nice drop. When it broke the 50, we got a nice drop. When we broke the 50 on the way up, it accelerated the rally yesterday. Now, we basically closed at the 20, held that 20 today. This is today. We closed after going up and breaking, came back and closed. So the fact that we're still holding it, the market's interpretation is that we've cleared it. And we basically closed above it. Not according to what I see, but we are going to have to give it to them. And the fact that we're still holding it as Globex begins to travel around the world. So that's telling us upside. Now, if we get the upside so they can get their expiration, they can get all the prices that they want, fine. But if it starts to tumble, and again, breaks the 20, first sign of weakness, comes down, breaks the 50, second sign of weakness. Now you may be wondering, where the heck is the 200? Let's go out and take a peek. So the 200 on the daily chart, it's all the way down here at 41.27. So breaks the 50, more weakness. You see what we got as a result. Now, if it starts falling down and we break this, then you're going to know we're in a larger corrective pattern. That's how we check on the daily chart. And we then can conform and decide what degree are we dropping. So right now, I'm going to call it an A. I'm going to call it intermediate degree. And what that kind of tells us is that we're going to get an intermediate degree B wave, and then we will get that intermediate degree C wave. But don't forget, that then just tells us what we're finishing on a primary level. And then we still have more after that to a cycle level. So this correction continues to unfold over a length of time. But I'm trying to share what's going to be happening here and how and what's going to start kicking it in. These are technical factors for the market, and they're playing around. And so if it goes up, I imagine it's not going to take very much for it to come back down and break that 20 and close below it, break that 50 and close below it. Then we could very likely then say, okay, we completed the B wave, we're dropping in a C wave, and the C wave should make this look like kids play. It really should. There won't be any horsing around. There won't be any of this scraggly crap going on. A C wave will be pretty devastating and pretty severe, and just boom, 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 and come down. And that one I would anticipate will come on down and break that 200-day moving average. Now, that's going to be pretty severe, because I can put, once we get the top of that B wave, I will run Fibonacci extensions, and we can see where it's going to come in. It may show us that we just kind of come here, but I still believe that ultimately we really start to break down. I mean, we still have support at 42.24 as it comes down. We are going to have support at 40.29. That's on the basis that it breaks that. But here I have to go out now so that we can see March 2020. 2174, folks. That is where I believe this all ends up on an initial rundown. All the way up. So I'm talking about primary and cycle degree. That's what it looks like to me that we should be getting into. And then we have to go out even further. And I'm jumping ahead of the game here, but we have to go even further to mark this cycle wave 4. Because remember, really what the S&P is correcting is similar to what's being corrected or will be corrected in the Dow, and that's on the super cycle level. So this cycle 5 up here completes super cycle wave 3. So it's a super cycle wave 4. Where should it end up? In the 4th wave of 1 lesser degree. That's cycle right here. How long is it going to take? Well, this one took 9 years. So on 1 level up, should take at least 9 years. But look, it had declines, it had massive rallies, it had massive declines, and then within it, it had rallies, it had declines, it had rallies. There's going to be so much trading that it'll be fantastic. We're just going to be trading with different numbers. And if we can stay focused on the fact that, like, yeah, this is what's happening, but who cares? Because there's going to be plenty of volatility, there's going to be plenty of prices. And as traders, we really can't get married to direction. We have to stay open because the market ebb and flows and on several degrees. And we're trading off of a 5-minute chart. And how can I tell you about a monthly picture off of a 5-minute chart? Other than it produces the same patterns. But here, this all looks very, very bullish. And as a day trader, yeah, I want to catch that. Yes, I want to catch the downswings. Of course I do. This was fabulous to trade. This wasn't bad trading. This had its moments, but it all provided some very good moves. And that's what we're trying to catch. That's the name of the game here. You want to walk away with a $500 to $1,000 profit on a daily basis, if not more. So this is what I'm talking about. This is the type of market we're stepping into. It's providing the action, the price action that allows us to really step in and make that kind of money every day. Now, and it quite often happens within the first hour and a half to 2 hours. That's when everybody comes in, does their business for the day, and then they're done and they walk away. Then we just are left with, all the stocks that trade and move around and, hedging, et cetera, et cetera. But there's still moves during the day. Don't be fooled. But my point is that I'm not married to this count. I'm just trying to put parameters around it so we can get an idea of what we should expect tomorrow. And then I put parameters around that by using Fibonacci and moving averages. This is what it's all about. And it takes a lot of, not a certain mindset, because you really have to be very focused on what is trading in front of you and the price action. Because when you're going to stop in and trade futures, this thing, it's called a mini, is $12.50 a tick. A tick. And there are times this will move $2, $3, $4 pretty quickly. And the NASDAQ is $5 a tick, $20 a point. And there are often, every single day, the moves are $2, $3, $4, $5, $6. And then it breathes, and then it goes $1, $2, $3, $4, $5, $6, $7, $8 more. This happens all the time in the NASDAQ and in the S&P. Staying focused, concentrating on the price action and your moving averages and just what the market does really can produce big, big, big profits, big P&L that you get to walk away with and bank every day. We don't carry positions overnight, but no matter what level you're on, whether you are a position trader, whether you are a swing trader, whether you use channel lines, no matter difference, there's something for everyone in this market. And again, I'm just going to say, if you ever have an interest in just really wanting to focus on trading, and you want to do it collectively with others in a trade room that has some very outstanding moderators, then I would suggest you take an interest in my trade room. And again, it is the Logical Signals trade room, and you can leave me a message on YouTube, or you could try to contact me. I'll get you connected. I'm still running the promo, so you can give it a try for less than $100 for a month. Come in and take a look for a month. If you don't like it, no problem. It's not for you. Most you invested was $100. But we offer coaching. We offer longer term discounts for 6 months, 3 months, 12 months, and also package deals for coaching. So give us a look. We're having fun. And that's not to say that every single day you won't hear me cuss, because sometimes it just comes flying out of my mouth if I'm not really liking what happens, because the markets can get squirrely. All right, enough. For tomorrow, I am still thinking we're going to have some upside. So that's what I would be looking for. I think that we continue to move higher. Our resistance is 44.60 to 44.84. Then if they really want to push, because they had a pretty decent day today, the Dow up 500. At one point it was up over 600. These things just continue. Why not take advantage of it? I don't need to like it. I don't need to care why it's going up. I just need to pay attention to what the price action and the bars are telling me. This is where I'm going to leave it. Downside, you've got that support coming off. You got the moving averages. Right now, even on this 30-minute chart, they're still pointing up. And that is going to take some doing to get this to turn on the 30-minute, the 1 hour, and then the daily. Remember, the daily is sitting right at that 20. And if it moves below, then we're going to start to see some weakness. If it gets below the 50, that's going to really create some additional acceleration. That's weakness in the market, and the reaction from the market will be, uh-oh, I'm out, and they start getting out. Okay, that's it. Next update is going to be on Sunday. Have a lot of fun trading tomorrow. Stay focused. Use your moving averages. Use Fibonacci extensions and retracements. And just stay close. Have a good weekend. Next update will be on Sunday.